A weak global backdrop was a spoiler for risky assets last year, but gold investors, on the other hand, clocked strong fortunes during this period. In Samvat 2079, gold outperformed equities and fixed deposits with a 19% uprun as against returns of 11% and 7% respectively for the latter two. Commodity experts remain fairly bullish on the precious metal for Samvat 2082 as a war-ridden global backdrop will see investors sticking with the safe haven asset they believe.
The global tensions surrounded by the geopolitical issues, the war escalations between Russia Ukraine earlier last year, and this year again the war escalations between the Israel and the Hamas. This has laid down a foundation for the gold prices to remain on the higher side. The rupee depreciation has been one of the major causes why the domestic market has been outperforming into gold prices, which compared to the international prices. But the outlook overall from 1 year from down the line here remains on the positive side for the international as well as the domestic market. So on international front, the COMEX gold can touch the levels of around 2100 to 2150 on a very conservative basis. And from the domestic outlook, the price outlook remains positive and the prices can touch towards the levels of around 66,000 as well.
Trivedi suggests investors remain long with a 15 to 20% allocation to the precious metal, 60 to 70% to risky assets, and the remaining 10% to bonds in the overall portfolio. Meanwhile, analysts at Geojit Financial Services estimate gold prices to gain 7 to 8% in Samvat 2080 at par with fixed deposits, while equities are projected to see higher returns of 12 to 15%. Besides, this year's gains are expected to be driven by the US market, especially as potential interest rate cuts are likely to weaken bond yields, boosting the attractiveness of the yellow metal.
If there is a cut in the US interest rates over the next 6 to 8 months, then the previous top of gold, which is at about at $2,060, can be taken off, and there could be a rally for another 10% in gold prices till about $2,200 or so. So this leg of the gold market rally could be led by the US, where gold prices have not seen any major appreciation since 2011. Where the prices had peaked at about $1,900. So the recommendation in Samvat 28 would be to start accumulating gold at lower levels.
Thus, with the outlook for the precious metal being upbeat for Samvat 2080, investors should use any corrections to increase their allocation, analysts suggest. Equity markets will be closed today, November 14, on account of the Diwali Bali Pratipada holiday.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
He's moving from employee to employer. Business Standard.